Good afternoon. I'm Sean Hannigan, the Chief Investment Officer of Aurora Capital, and this is the May 25 update. Well, the markets continue their strong recovery into May as trade tension eased and the hard economic data continues to be quite supportive. Things like company earnings, job growth, etc. But sentiment and consumer confidence continued to weaken, and this is creating a little bit of uncertainty in the market. The New Zealand economy, while still weak, showed the benefits of falling interest rates with small annual growth in retail sales and house prices and the unemployment rate remaining a bit stable, which is promising. However, the Reserve Bank still reduced rates again, dropping down to 3.25%, which the market now picking rates could go as low as 2.75, which is going to be very beneficial for stimulating growth. Another interesting factor in the New Zealand economy at the moment is the fact that high dairy prices are helping the rural economy, and actually the rural sector is doing better than the big cities at the moment. So while New Zealand is dropping rates, the central bank in the US remains pretty concerned about the inflationary impact of tariffs, and so they're basically on hold talking about uncertainty. This is, of course, creating a bit of tension with Mr. Trump and Powell, which is not helping markets' confidence in the independence of the central bank. The other issue in the States at the moment is this big, beautiful bill, which is creating some real concern amongst global investors about the impact on the US debt, which is growing at a rate which is not sustainable. Even Elon is getting a bit jumpy and causing a bit of tension with Donald. This is not, of course, wasn't helped at all with Moody's downgrading the US debt down to AA+. Moody's is a little bit behind the other rating agencies, which had downgraded US debt a while ago. But nonetheless, the sentiment is not helping, and certainly you're seeing some of the more recent bond auctions not getting the support they have in the past. But anyway, all our funds generated some positive returns for the month of May, which was great, with their growth fund generating close to 3.3% after fees, and the conservative fund 0.7%. This is particularly satisfying because we've still remained quite large underweight to global equities. But substantial value was added through our active managers, with Munro, our global growth manager, outperforming by nearly 10% over the month. Stefan and myself have just spent the last week in Sydney visiting many of our incumbent managers, as well as a few potential new managers in a range of asset classes. And we came away after the week with a conviction reinforced at the quality of our incumbent managers, and very excited about some of the potential new managers in the unlisted and real asset space. So look, if you'd like some more information on the market performance, please check out our market summary on our website. And if you have any other questions, please reach out to your advisor. If they can't answer the question, they'll come to us, and Stefan or myself should be able to answer. And look, we really do appreciate your questions because it helps us pitch how we deliver our content to you. Thanks again for your time, and look forward to seeing you next month.